If you're a Canadian landlord over 45 and you're worried about still having a mortgage when you retire, this training is for you. I'm going to share a real case study of a 50-year-old project manager who thought he'd be working past 70 because of his $450,000 mortgage. Spoiler alert, he's now on track to pay off his mortgage 7 years earlier. Same family budget, same rental property, completely different outcome. Hello everyone, my name is Sylvia Ho and I'm your financial landlord consultant. I'm also a mortgage agent for the last 25 years and I work solely with landlords to save them money, to reduce the taxes that they pay, and decrease the interest that you pay the banks. I'm also known as your cash dummy queen. If you love the weekly training, please comment below, please love, please like. If you're watching on YouTube, click on the check mark and subscribe to my channel. First, let me bust the biggest lie 99% of landlords believe. I'll probably have to work past retirement because I still have this huge mortgage. If you've had this thought, you're not alone, my friends. But here's the problem. Most landlords are following what seems to be logical. Rental income comes in. From there, you pay the rental expenses. And whatever's left over, hopefully something's left over, it's used to pay down your primary home mortgage. Hoping, my friends, is not a strategy. In fact, this approach is costing landlords thousands and thousands of dollars. Let me show you why. This landlord was completely stressed out. Sylvia, I'm running out of time. I think I should sell my rental. He's a professional in his 50s, making over $200,000 a year. He has one rental property, losing $300 per month. He has a $450,000 mortgage on his primary home with 25 years left. Despite feeling trapped, he was doing everything right. Does this sound familiar? He maxed out his RRSPs, he contributed to his TFSAs, he bought a rental property, but he's still looking to work past 70 years old. Here's what changed. I introduced to him rental cash stemming. Instead of using the rental income that comes in to pay the rental expenses, this is what I recommended. Step number 1. You take all the rental income, every single penny, and apply it directly towards your primary home mortgage as a lump sum payment. Step number 2. You use your re-advanceable line of credit secured against your house to pay for all the rental expenses. And when I say all the rental expenses, I'm talking about mortgage payments, property taxes, condo fees, utilities, insurance, repairs. Step number 3. You claim those interest costs on the line of credit, and by deducting those interest costs on your annual tax returns, you will now receive tax savings, typically in the form of tax refunds. And then you pay down your mortgage again. That's 13 times per year that you're paying down your primary home mortgage. The magic? Well, there's no magic to it. We are using CRA's rule that says, if you borrow to invest, and that investment has a reasonable expectation to make money, and the intent is to generate income, i.e. rental income, you can deduct the interest costs. Boom! His timeline went from 25 years down to 18 and a half years. He got back $335,000 back into his own pocket. Same family budget, same family lifestyle, no change. Just a cash flow reallocation. Massive tax benefits and deductions. That rental property he was worried about and thinking of selling, well, it's now become his secret weapon for early retirement. Now you're probably thinking, you're like, Sylvia, the interest costs on the line of credit, that's higher than my mortgage. You're absolutely correct. The line of credit rate is a higher rate, but you get to write off that interest costs on the line of credit, and hence you will get back 30 to 50% of those interest costs in the form of tax savings or tax refunds, depending on your tax bracket. Now, what about CRA audits? Will I not be audited, Sylvia? When you apply the strategy of rental cash stemming, I tell my clients, it's not if you're going to be audited, it's when. This strategy is CRA approved, so during any audit, they just want to know you're doing things properly and you're following the guidelines. We're not breaking any rules. Everything we're doing is absolutely legit. This client went from lying awake worried about his retirement to having complete confidence. If you're a landlord over 45 still believing you'll work past retirement, you're believing a lie. Your property, your rental property, is not holding you back. It's actually your fastest path to mortgage freedom at retirement. Every month, this landlord delayed implementing the strategy. It was costing him $3,500. The question isn't whether you can afford to do this. The question is, can you afford not to? Let's jump onto a complimentary mortgage freedom strategy call. And on this Zoom call, I'll analyze your numbers. I'll run your numbers through my cash demand calculator. I'm going to show you exactly how many years you can cut off your mortgage. And we'll also create a custom roadmap plan. If you want to stop worrying about working past retirement and start planning for mortgage freedom today, comment freedom below, and I'll send you a link to my personal calendar. Don't let another month pass by and leave money on the table. Your future self is gonna thank you. This is Sylvia. I'm your financial landlord consultant and your cash damming queen. I'll talk to you later. Talk next week. Bye now.